Hello and welcome everybody watching the weekly live recap recording. We're gonna talk about the market as usual and then we have some time to answer some questions. Thanks for joining in and let's start right away. Crypto is pretty much not doing much, right? We are still like at the same price that we were 10 days ago. And so nothing to trade for me here, to be honest. Still waiting for this short. Have my limit order ready, play it quite wide as usual. It's it's very optimal to take shorts here in my view. And those gaps seem like they want to get filled. And we start more or less doing higher highs within here. And as said, I could easily see those getting filled. And even if we just take out those levels going higher, I'm happy with that. Should this like not happen, I'm prepared with a lot of shorts. Yeah, so shorts are more optimal in my view from a higher time frame perspective. And if I look at the daily, there's really nothing going on. As said, since 10 days or even more, we're sitting basically in the same range. And for me, as swing trader, this is not interesting to trade. I have patience, I wait here. Similar story for most altcoins. ETH is still grinding around the same range area as it did like on the 10th of October. And we're losing this trend line, but I do not give this trend line a lot of strength on its own, but it's definitely, should we not be able to break those highs very soon, I'm seeing rather more downside than more upside. And similar as on BTC, I'm looking for a short up here, but I could easily also see ETH doing another high here, taking 5K and going back down. But anyway, I'm looking for shorts here, willing to pay a stop loss for them. We have broken structure to the downside, but as I said in the last stream as well, ETH has done this before many times, breaking structure here, and then just going higher. So wouldn't be surprised to see it going higher, but at some point one of those closes will be the real one, and I want to have shorts rather sooner than later for that. So yeah, BTC ETH, altcoins pretty much doing the same thing as ETH. I cleaned up my whole ticker list here, removed all the garbage, just a few I'm looking at. I reduced my size by 70%. And a lot more going on stocks. We had some breakdowns here. I did a 90% TP here just because my trailing stop loss was hit. The rest as Moonbag, prepare for higher prices, and if it goes down, these 10% won't hurt me. Same story here in Rigetti, broke structure to the downside. I've reduced here. We nuked way lower from here, 12%. Now we bounced 10%. So volatile stuff, but in the end, structure is breaking to the downside. If we go for this demand, I'm willing to add some back. So I did a full TP here, even though it's not on the chart yet. Full TP. And I'm willing to add back here, depending on what wages are doing. And this brings me, let's talk about the S&P first. I got stopped on my swing short idea, which is totally fine. My stop was above this high. And it seems like we have closed the daily above the all-time high again. We have also closed daily and weekly above. So interesting stuff. As long as this trend keeps on pushing higher, I'm not willing to take another short. I'm doing the same thing as always. I wait for a momentum break and go short on the retest. And maybe if signs are shaping up, I'm shorting into the momentum if I see clear signs of a topping in, but there are usually not that clear signs that I want to short against momentum. And right now momentum is pushing higher again. So willing to let this move play out and to short on a confirmation. And this is also the case for all of those shorts, for all of those longs. I reduced a lot of them based on the momentum break or based on a breakdown. This one is close to the level. Oh no, it gapped below. Yeah, I thought, what's going on? It gapped through the level, so I'm not interested anymore because we gapped this area once, we gapped it twice. And so if we retest this, I think there's a lot of liquidity and we are going to roll over from here. So I cut my position here also publicly. I'm not in this one anymore. It's on low volume anyway. So not that interested. Here's the full-blown Degen play. We will see it's very low macro and nano size. I also closed this one fully, also low volume. We had the breakdown on the SPX. I'm not interested in this crap from a fundamental perspective or anything. This was just an interesting trade. I was scaling at the lows, I was taking profit at the highs. Very volatile thing. Yeah, this one also had time frame play still in. XPEF did, interestingly, came back to the entry, and we're still holding again. We're holding this area again. But I won't allow a big drawdown, so I will cut around break even should we get a confirmation breakdown here. Because if I remove the red trend line, and if you look at this, this could easily be a parabolic top forming here with the right shoulder and then going down. So not allowing a big drawdown on this one. But I have my stops always soft on those plays, and you will see shortly why. CRISP is breaking down here, so same story. We had the close below. Now a second day, I gave it a little time. Could be a double top here, and then within the double top we have the head and shoulders and everything. So let's see what early next week happens. I'm a little more patient with this one because it's actually a higher volume one, and the SPX did another high, so maybe it's a good idea to keep on, to stay long. This one interesting. This is a perfect example why I play my stops soft, because we had this bounce and I did a 20% TP on this at this high here. We retraced it all the way back, and I said my stop loss is at break even, which it is, but at the same time I played soft, and we came here and we did not really like take this demand or anything. We just wicked it basically, and then we closed here, and then we closed another candle here, and we never really closed below this demand or anything. And this is why I played soft, because I don't need to be perfectly like out at break even if I pay a few bucks for being still in the trade for the next bounce, which was very likely in my view, because the whole structure reminded me a lot of Oklo. So if you compare this, for example, Oklo here, we had a similar thing here, big retracement, 30%, little consolidation. I went long here, it pumped up, it came back down, it just moves a little faster, and then I was not stopped around break even because I was a little more patient, and then obviously the trade turned out to be an insane winner. Also findable or seeable in the group, and I think Credo is shaping up something similar, just a little slower, but yeah, similar structure. Will TP another like 35% up here if we get it. But now, for example, I won't allow a big retest. Same story, it's still soft, but it should react up here because this is taken. It should react up here. If it doesn't react up here, I won't allow like a big drawdown. Similar company making similar stuff, Alap, shared by Hoodstock. Also interesting structure, probably filling at least those FAGs or going for the supply here. Time will tell. Other than that, I mean, the usual plays still all in play. We broke this down, probably going high from here. Very young chart. A lot of potential, this company. Did a TP, but still good exposed. Synopsis, similar story, retest. Now we go back up here. If you reject here, come back down, won't allow a big drawdown. And what else do we got? Yeah, Loy. Also public play was shared on X. I did a 90% TP here because we lost structure here and momentum, and from there we nuked around 20%, and then we bounced around 30%. So again, volatile. So if you like volatility, I would stay away from crypto. And yeah, so for now, retest from below. If we turn out to go higher, I did not add back here just because the SPX was still in a downtrend. But should we go higher from here, I have still my Moonbag left, which is totally fine. I mean, I bought this thing first at 50 bucks, and it was, yeah, quite a good win. And so no hard feelings if I now sold too early, like some people would say. I put my stop up on this one simply because I don't want to retrace this, like pay all back, because if it's retracing, here's no structure at all, it will probably go down at least to the 0.5, which means I pay a lot of my gains back. Run, also make or break point. We have many charts that look like this, sitting here at this trend line. If they break down, they probably go back to this big demand, or at least here. So breakdown means TP for me. Not necessarily a full TP, but definitely a bigger TP. Yeah, here we touched below, we dived below the trend line again, but I'm not trading the trend line, so I don't really care too much about the trend line. Now this is the demand, and it's still, from a risk to reward perspective, it's still nice to be in this trade in my view. And so I give it a little more room to breathe. No reason to be overly cautious. Hello, Daniel, good morning. Mind Medicine also, like I said, many charts have this kind of structure right now where they go higher, but they're sitting at this make or break point. I mean, this one has some way to go. I should probably move my stop a little bit lower and see what's happening here. Probably should really roll over here, a TP here, and wait for this reaction and a TP as well. And even though this does, from a trade perspective, does not look like it's in big profit, you see those moves are really volatile, and so you can print a lot of money, even though on the chart it doesn't look like much. Yeah, so anything else, all the others are not active at all. So this was pretty much my stock summary. Back to the S&P, as said, it's making a higher high here, new all-time high, even close above. So if you look at, for example, if you look at previous tops, what we had was some kind of breakdown, some kind of new high, some kind of ranging, even before the big drop, another higher high, and then the big nuke started. And in an ideal world, I want to get in somewhere in here, but they don't make that easy for you, especially because they make it close above, and then you think like, oh, it's going higher, and you want to long the pullback or anything like that. But once the first signs of weakness occur, or I see like signs on the market shaping up, also like crypto going crazy again and all those things, making people overly euphoric will be an early trigger for me maybe. And it's always about scaling, right? So I don't buy immediately the whole position if I think that the top is in. So I scale in. If I get more signs of weakness, I scale in further. Even though it's a little lower maybe, my average will then still be around the top. And this is what I'm aiming for, because it's a swing trade, right? I don't need to be precisely in here at 821 or 22 to print into the bear market. It could also be somewhere here. My average entry, my stop loss is whatever, 3-4%. And the move down is 20%. It's not a like super high R trade or anything, but it's a great hedge against all other risk assets. Yeah, and again, we were talking about structure here. Again, some kind of breakdown. You think like, oh, it's over, a little more ranging, one more push to the highs. Low compressed ranging seems to be a case, seems to be a thing, like here, and then the real breakdown occurs. And if you go back to like this, you see a little compressed range up here again after some kind of breakdown, or you could consider this the breakdown. Either way, let's see what happens here if we start doing a similar pattern, like doing basically nothing, just going a little sideways here. I will probably start scaling in the short, because it's obviously nicer to be in higher, having a higher R and all that. So, so much to majors. I also think about taking a position on the Russell, because it's obviously a lot more volatile. And then I don't need as much, or not as big as of a position size, which means I do not need to lock in as much money into one play. But it's different. And it seems like we're taking out this key high. So we closed the weekly above, which is okay. So something I wanted to see. And we have some daily candles above. Now the question remains, can we hold up this trend? And similar story as on the SPX, should we break this down, I can still decide here to go short, put my stop above the high, and then I have still a anti-investment against all other risk assets. And obviously, as a swing trader, I want to build such positions here simply because if there is a bear market, I cannot bet on long for maybe a year or something. And so I try to catch those swing shorts here. And I think people are way too zoomed in and they don't see like the forest for the trees, or they see the trees but not the forest. So they look at the single trees, and many trees make a forest. So basically what I want to say is, I only know the saying in German. What I want to say is it's most optimal to look for shorts here. And as I said, people are so zoomed in and they look like all those range trades, which is totally fine. But at the end, I want to print while doing other things in life. And so I look for the shorts here. And for example, on BTC, as I said many times before, shorting BTC up here is for me like buying it down here. Even though like it's never like as the same performance, because obviously a short can only go down 100% and it won't go down 100% in my view. But even if it goes down 70% or something, which would be exactly somewhere in this demand area here, it's still the only position that the only positions that I can hold for so long, comfortable, and print while I'm sleeping, while I'm doing something else, and I can still look for range trades in the meanwhile. But yeah, so for me, as optimal as buying BTC at around 20K. We have gold. I did a 65% TP within here, simply because where it started chilling gold like crazy. We broke the 4K level, which made a lot of people bullish because like the psychological level is broken, whatever that means. in terms of market mechanics, it means nothing, but people seeing this and saying like, oh, this is bullish. And so it's in reality, it's bearish. And you see, we have this big supply up here, and I could also refine now the supply to other things, but the idea is still the same, looking for a swing trade up here, getting in, scaling into this play, maybe bettering my average to somewhat like this. And I see a retracement at least to down here, because not a lot of structure here, maybe even a bit lower. Time will tell, but I think this is a good idea to target this. And in an ideal world, I would love to see the trend line breaking down. First, we have this demand block here. So breaking it down, maybe even taking this low in an ideal perfect world, right? So usually this is not what's happening. And then we get the retracement. Then we get the retracement into the supply, and they go short here. And if it's not happening like that, so if it just go up here, my size will be a little bit smaller, because this is it's not a good hand to play anymore, or not as good as if we have the breakdown. So I can trade a lot of things, but I always considered how optimal the level is with my sizing. So I made this example of poker playing in my recent post, and it simply means I have either a good hand or a bad hand, or a better hand or a worse hand. And if I have a better hand, I obviously size up my risk. And so breakdown means more risk, no breakdown means less risk, but nevertheless, I'm trying to short the gold top here and trying to better my average into this. And then again, maybe 1 year of risk hedge position, which is printing while I can do anything else and do other trading. And these are my golden bags, like buying quality assets in the bear market is selling quality assets at the peak of the bull market. For gold TP, was it a technical target or based on current market sentiments? So I had a lot of technical targets within here. So there was this minus 0.5, if you remember, and I did TPs here already. And then we have this aggressive push. I mean, look at those daily candles. It's like almost 3% here. 1.6%, and then again above 2%. And you just need to look at the history of gold. If it starts doing this, like 2% or more daily candles, 3% or something, it's usually very close to a top. And this is also something, if you look at the history of gold, once it starts to go as parabolic, you see those daily candles, 2%, 1.3%, and then 2.5%. And Once it starts doing this, first of all, the move becomes unsustainable because someone is pushing price so aggressively higher, and it might be retail, it might be wealth, it might be institutions, whatever. It's not sustainable, and also it creates like euphoria, right? So the more aggressive a move gets, the bigger the pump gets, the more euphoria it creates. And the more euphoria we have in the market, the more likely it gets to sell something. So this is one, this is my technical trigger. This was my technical trigger. Because the problem with gold is, if you trade the trend line, usually after the top, once the trend line is broken, you already paid back a lot of gains. And this is not what I wanted to do here. I mean, even though here we had, on a technical basis, we had this move breaking down here, right? And so here could also be my sell. I mean, it's not that perfect, but I'm not here for perfection. So my TP, it was 2 TPs, and it was an average of here. I also did not sell the Pico top, and this is also not my goal with swing trading. But many signs shaped up. So first of all, the big daily candles, the aggressive move. We had this breakdown here, and we had a lot of bullish sentiment around gold. I think it was JP Morgan talking about gold, and like gold is the new big thing, and blah blah blah. It's similar as in crypto, but it's obviously a little slower, and the shilling is different, and you have a different community, but in the end it's still buying and selling, so the principles remain the same. And I decided to go for more, and also consider that I am up significant on those trades. I mean, 30% doesn't look like much, but obviously it's about size and risk to reward. And so those trades are great trades. And so I have still size left on gold, and should this break down, you see where my stop losses are, but obviously I want to sell as high as I can. And I will keep those longs, or this long, which I have left. And then I'm hedging this with the short, and should we go higher, my long is still printing, and should we retrace from here, the short is covering the long, and I still TP on the long here. So I still end up making money with the rest of the long, but I also end up making money with the short. And so I'm prepared for every outcome, which is, as I said also many times before, is what I'm aiming for always. Yeah, similar story as on silver, breakdown here, maybe retest, but I'm not trading silver. I like trading gold more. Yeah, I'm talking about the majors in crypto next week. Just so much, a little overview. I'm going into depth in the majors update video. But here we are still creating higher highs, but obviously this could roll over from here. As I said, filling this FVG makes perfect sense. I'm not saying we're going into the bear market immediately from here, but I'm also not saying we're going to the best case target here for USDT. But what makes perfect sense is a retracement from here, at least taking this level. Simply for the reason to make all the people that sold this, make them think like, oh man, I sold too early and blah. They add back, they buy back, and they end up buying again into a higher time frame premium. And this is why I think this is very likely. And it will feel like a mistake if you sold, or if you managed your risk or anything. It will feel like a mistake, and this is no coincidence. This is by design. And then the question remains, can we take out this high? We make internal higher highs. We will see. We will see. The best case target is still there. But one thing to understand with those percentage things, just because there's a best case target at 3% or 3.4%, does not mean we need to go there immediately. It could also happen like in 4 years or something. And the next thing is, just because like 3.4% US Tether dominance means that Tether dominance is losing value against all other cryptocurrencies, which also includes stablecoins. So for example, let something happen to USDT to Tether. Should something happen to it and it loses a big chunk of market share because of whatever, they're not back, they're whatever going insolvent, or God knows what, but should this happen, obviously like the dominance drops, right? If people left or abandoned Tether and go for USDC, for example, Tether will lose market share, so this will go down. And so the best case target does also not imply that this means altcoins need to go up. I mean, it could be, obviously, but it also could mean that people are just going into USDC instead, and it does nothing. It means nothing for altcoins. Or it could also mean they just sell all of their Tether and go and put it into real money. And so this does not mean it's necessarily bullish for the rest of the market. This could also be very bearish, because I think we all agree if Tether fails, this is definitely not, it's probably very likely not going to be very bullish for the rest of the market. And so keep that in mind and stay flexible. Just because a best case target is there does not mean it needs to be reached immediately. And on the other hand, it also doesn't mean this is bullish for the rest of the market. And then I have a prime example, because people usually would think if BTCD is going up, this is very bullish for BTC. But we all agree that this week wasn't very bullish for BTC. It was just less bearish for BTC compared to altcoins, right? So BTC got a bigger market share percentage-wise, but at the same time, it went down. But altcoins went down further. So keep that in mind. Same story for Tether dominance. It's a dominance chart. It does not imply that the rest of the market needs to go up. It just implies, or it just shows the share that Tether has compared to the rest of the market. Good. We also can talk about this for a brief moment. First of all, this is like the Economist clock, if you remember. November has a lot of like red and arrows down, and we have the yen here, and we have a planet here, which I would say it means global. I don't know what the wall really means, but we will see probably. But global and down and yen, I'm not quite sure if this is like a very bullish scenario. And I don't know if you remember, but we had the Japanese carry trade, the yen carry trade, last year. Was it last year? I think it was summer of last year, and it was not very bullish for the market. So BTC went down and the SPX went down with it, and we did, this was exactly here, I think. No, it was this one, like Hello Tinox. It was in July of 24. This was the Japanese carry trade thingy, and as said, we have the yen here, and so and down and all that, and the the yen carry trade just means that people were borrowing the yen for like 0% interest rates, and we're buying US stocks and all kinds of assets with that. And when the interest rates go up, those people need to cover their positions, close their positions, and pay back their yen, because at some point it's not sustainable anymore with the interest rates. Also, if there is a risk of the market going down, those people need to front run each other, and this could lead to a big downward spiral, like it was last year in July. And so we have still high interest rate for Japanese standards. I mean, it's at 0.5%, but it comes from zero. And so there is a systemic risk to this. If they keep on, so they are like in this pressure situation where they either keep them low, but they devalue the yen further. And if they can't do that anymore, because obviously the economy and all those things, like they need to work properly and they need a stable currency for that, they need to increase interest rates more. And if this is happening, this is not very bullish for the rest of the market, for the risk assets, because as said, this was more or less a free money glitch, taking the free money from the Japanese government or from the Japanese banks and buying global or US assets with that. And you see the interest rates got increased. We can also check. By the way, if you don't know, we have this little planet down here, macro maps, or you add it with products or something. I added it to the favorites, and then you can check interest rates for globally, and you can even go back to a date where you think like, okay, this is important. I want to see what the interest rate was like, and this was just like one of the best financial maps I have ever seen. You have inflation rate, interest rate, GDP, unemployment rate. It's just beautiful, to be honest. And so if I go to Japan here, and I can show it on supercharts, you will see that it was at around zero for quite a while, ever since 2016, and it was very low, like it was basically zero. It was negative. So you got paid for yeah. Anyway, so ever since 2000, it's very low. It's at zero, or it went maybe up to 0.2. And you see the one time it went up to 0.5, and this was in 2007. And then over 2008 it was lowered again, and then we had even negative interest rates. So if you held money on the bank, you need to pay for that. And so obviously people bought a lot of assets, and so the smart money in Japan bought a lot of assets globally probably. And also if you had access to this, you could borrow the money pretty much for free and put it into other assets. And ever since like March of 24, they started to raise interest rates. And as said, we have this big like drop here in the market. And this was July of 24, after this whole thing here came into effect. Obviously those things need time, so interest rates hikes and lowerings take some time to really unfold. But as said, I don't think that the whole risk of this is gone by now. I just think people don't think about this anymore. We can add this, by the way. Nobody talks about it anymore, and to be honest, I would have also forgotten if not for the whole Economist calendar clock thing with the red yen on it and global and arrows down. So, and this adding this to my whole thesis of like Q4 not being very bullish this year, it all makes perfect sense in my view. But time will tell. This is just a thesis, and I can't prove it until it's happening. And what I've done is looking at the Japanese strength index. And we are ranging ever since 2023, but obviously the yen lost a lot of value against other major currencies, simply because, I mean, obviously if you have negative interest rates, it's not good for the currency, because people just take the currency and buy other things with it, more or less selling it all the time, over and over and over. And also, first of all, they're selling it all the time, and also they need to print a lot of yen if people want to borrow it. So wasn't very bullish for the currency, creating different kind of problems than high inflation. It's high inflation, but it's creating a different kind of problem than if you make the currency too scarce. And so they need to keep it in balance, and they did not a very good job with that over the last 20 years. And so there's a big imbalance in the market, there's a big risk in the market, and as said, if they need to higher rates, this could turn out to be a very big systemic risk. But at the same time, if they keep increasing the rates, and we should like filling those imbalances up here, and I mean this chart goes back even more, but I'm looking at the strength index just to get an overview. It could be bullish to acquire some yen, to be honest, compared to other currencies, depending on what those are doing, right? So if the whole world is just like increasing interest rates to double digits, it won't make a big difference. But if other like countries keep on printing money like crazy, and Japan is deciding to like making the money more scarce, this could be bullish for the yen, like from a yen price perspective compared to other currencies. But as said, we have the systemic risk of the Japan carry trade, the yen carry trade. And so would be probably, if they keep on hiking rates, would be very bearish for the global markets. But at the same time, if this chart is breaking out, I'm considering putting a good chunk of my cash holdings into the yen then. But time will tell. As said, it's a thesis, taking it level by level, and if it gets invalidated or if they're just lowering rates, that's totally fine for me. But the last time they increased it to this point was in 2008. And I don't know if the yen carry trade was a thing there already. Haven't checked that, or in 2006, leading into the 2008 crisis. But I could imagine it was a thing. It was at zero also. But I have to do more research for that, and it's just a thesis. We will see. Okay, I think I'm done with my little rant, weekly recap rant. You can now ask questions if you like. You're sitting at work, Tinox. What do you work on Saturday? Listen to my favorite voice. Yeah, I do my best, do voice training like 24/7 if I'm not doing streams. I'm always caring about my voice and training it. I see. So you basically sit more or less in your selling room and you wait for a customer to come. I was working my first job. I took with 15, like a 450 euro job, 2 days a week. I took in a motorcycle, what's the English word? Like clothing and helmets and all that kind of crap, selling store. And obviously you have seasons for motorcycling, and in the winter time it was so damn boring, but also nice because we had a lot of time to talk and to have fun and stuff. Do you think we get a multi-year bear market in TradFi? I don't think multi-year. So my thesis is that we are topping around like the next weeks or months, and then we go into bear market into 2026, relief early next year, counter trend bounce, relief bounce, whatever you want to call it, and then like the biggest legs down into late 26 and finding a low into Q4 2026 or something, so late Q 2026, because usually bear markets do not last so long. So if you look at the longer ones, you see it's like 280 days, which is not even a full year. And leading up to this, we had a bull market of 600 days. We have the COVID crash happening really fast. We have now this crash happening really fast. Now, if you consider it like 300 days or something, would lead to late 2026 somewhat. And also if you look at like historic, it's always about just zoom out a little bit. Don't be too distracted by charting mid time frame breaker blocks all the time. Also zoom out sometimes and just check the historic charts, because as said, bear markets are usually happening pretty fast compared to the bull markets, because this one was a pretty long one, so it took over a year. But it also was the financial crisis, right? This is not something that happens every second year. And usually destruction happens very fast and the build-up takes very long, every time like climbing the wall of worry, climbing. And if everybody accepts that this is like, the new paradigm, a word like that, and then it's just nuking, and it's nuking quite aggressive, quite fast. So bear markets tend to be way shorter than bull markets. Maybe that's also the reason why they call it being long and being short, because you're just short. And 2000 to 2002 was a pretty long one, pretty long one. But yeah, overall, you see if you zoom out, the whole market is going up most of the time, and you only have short periods of big crashes, corrections, bear markets. And so yeah, this was my thesis. But obviously I take it level by level. So if the SPX starts correcting more than 15%, going down here into this area, we have big blocks here, 2-month block. We have a monthly double hidden partial here. So if it goes down 15% or more, I will start scaling into my long higher time frame buys in stocks. And then obviously I need to refine them on their own. So if, for example, want to buy whatever Google or whatever, I obviously then buy it on the Google chart. But this is my major I'm looking at. "17 years you're doing that already." Oh, that's crazy. But yeah, I mean, if you like it, and as said, so it has two sides. The whole, when I was like working in such a shop, more or less, it was nice because the payment was okay. I mean, I got 450 because this was like the agreement, right? It was only 2 days as part-time job besides the school, and a lot of free time. And especially like if you if you want to learn trading or something like that, those jobs are perfect, right? They can be boring, like you said, but they are perfect for something like that. When I was working as a piston bully driver, I also had a lot of time to check the charts, to read books and all that. Oh, the stream crashed, right? Can you still hear me? Oh, it should be back on. But for something like that, I would also like, for example, if you want to make it in trading and you can like you enjoy the job to some degree, or you say, okay, it's all right, I get a good payment, I have an insurance, I have all that, but and I also have a lot of time to, for example, educate myself in trading. I mean, it's perfect, right? And the fun thing with this kind of job is you don't even screw someone, because what should your boss do? What else could you do but waiting for a customer, right? So I think it's a win-win, and you can use this time to educate yourself and build another, in the meantime, another cash flow. Not good for your boss, learning at work. Yeah, I mean, but what else could you do? Like, if you, for example, obviously there need to be some things done, like preparing stuff and all that. But at the same time, there's probably a lot of time where you just should wait for a customer, I guess. And what else could you do then? Yeah. And it was the same story for us. Sometimes I felt bad. I mean, it was a big chain. It was not like a private little company for where I was working for one boss. It was like a big chain all over Germany. But sometimes it was like, okay, what are we doing here? It's winter since like 8 hours. I'm standing here. There was not one single customer buying motorcycle helmets or clothes, obviously, because it's January. Nobody drives motorcycle. And I felt a little bad sometimes, but on the other hand, I was like, okay, what should I do? Like, we had some new things to change or whatever, and this was done like in 20 minutes. And then this was it. I just waited. But obviously, on the other hand, like in summer, it was crazy. It was all the time customers, non-stop. But then time goes by, right? So if there is nothing to do, sometimes the days can feel very long, and if you're like busy all day, the time flies by. But I guess if you can like spend a lot of time with trading in the meanwhile, time goes by as well. Maybe this weekend finally this bounce into my short level on BTC. But when was the point? Fuck off, I'm leaving this 8 to 17 world. What is that 8 to 17 world? Yeah. Okay, you mean the clock. Yeah. And going full into trading, I know you tweet about it, but how was this mental for you? To be honest, easier than you would think, because I had always the plan to travel the world, and I was coming back from my job there at the Glacier, and we had this old bus, and it was almost done restored. So we had all the, like, it was painted, it was the rust was completely removed and all that mechanical shitty jobs, and then it was all only about the interior, and this was like the job I learned. And so we had I stopped working in May, and we planned to leave somewhere in the summer. My fiance, or my girlfriend at the time, she broke her shoulder with a bike crash, and so everything went a little slower. But I had obviously a lot of money at the side, saved up from my jobs, from my company, from all that. And I obviously sold everything. I sold my car, I sold my motorcycle, I sold everything I didn't need anymore. So I had a lot of money, because my business was doing very well, and I could still like do my customers and all those people while restoring the bus. So we had like 3 or 4 months just restoring, not working anymore. She was like curing from her shoulder accident, and we were done in August. Also, the gearbox then broke down and all that. So it was kind of stressful. Also, it was not the van life dream everybody is showing on social media. But then we did it, and then we started our journey. And we were like busy all the time, right? I was working at the Glacier there, and I was working 5 days a week, 10 to sometimes more hours. And I was actually working. I had 2 days off. It was weird. It was like the schedule was weird, but it was like 50 to 60 hours, and then we restored the bus, and it was always something to do. And then you have nothing anymore. You sit then in your bus or whatever, and suddenly there's nothing more. The stress should be gone, but it's not, obviously, because you have years of just doing, and then suddenly it feels scary to not doing anything anymore. And this was weird, but from a financial perspective, I was in a very good place, or we were in a very good place. She obviously also saved a lot of money, so we knew we could travel for at least 2-3 years without any problems. And at the same time, I was interested in the market, and I was not interested in trading at all, because I never thought about trading or heard about like real trading. It was always like my dad told me about it, but then I thought like and I didn't understand it anything like that. But I knew investing is a thing, and I got very great advice, and I invested in BTC and in 80 different stocks at the time with basically all I had. So I had around like 5 to 10% cash left most of the time, and the rest was in the market, and was all from 2022 on. And I mean, obviously from here on, it was a great time to be in the market, and then I bought Nvidia at this time, and it did incredibly well. I mean, I sold too early, but ever since then I basically made money. And so I had never really a doubt that this would not work or something. But I knew, like, the more I learned about the market, the more I knew I had just a lot of timing luck, right? So because if I had only like done this a year earlier, I would be down 25% for a year, not able to pull any money out of this, more or less. And at the same time, I would still be underwater until, come on, until almost like 2.5 years later. And then obviously the performance would also not be as nice, especially like if you bought crypto or something like that. I mean, most people are still probably underwater from 2021, from the 2021 top. So I had a lot of timing luck, but also I had the guts to like pull it off at the right time and put just everything in, and I took a big risk, more or less, also. But I always took big risks in my life. I quit my first job. I just tried something else. I ventured into a industry, or more or less like into a craft which I didn't know nothing about, but I just started, right? And this is how I always did it. Never thinking too much about it, never planning too much, but just doing it, and then figure things out along the way was always the best way for me to go. And so into full trading, it was never into full trading. I went into full investing at the right time, and I made money from the beginning, basically. And then when I started to understand, okay, this was a lot of luck also, and I can't like replicate this really, only with the right timing luck again, and who knows when this time comes again, or and all that. And then I started with trading, and this obviously helped me then a lot to I keep up some kind of performance. In the beginning it was scary, and at the beginning I didn't make shit, but I always obviously traded on very low size, and I could still live from all the money I had saved up and the money the market gave me already. And then I could make trading work in the meantime. And now trading works, investing works definitely, because it's the easier part of the game. And once you understand trading, investing should be easy if you put in the right time, and if you take time to understand those higher time frame charts, and take time to collect some data and understand what's moving the market and all those things, which obviously people don't do. People think the only way to make it is trading, but trading is the hardest part of the game. So put in some time into the investing side of things, and you can build positions that print for years, right? It doesn't need to be hard. People make it harder than it is. And then also don't overthink. Like if you have a dream, if you have a plan, do what you can to plan it out as good as you can, but also understand you will never know each variable. You just need to start, and you need to figure out things along the way. And yeah, things will work. So if you're bold in life, and if you then put in the right work, and all those things, you will be rewarded. Life, in my view, is rewarding the bold. And so, if you have a dream, just pursue it. The worst thing that can happen is that you need to go back to what you always did. Because, for example, if everything like failed, everything I did, for example, let's imagine I bought the 21 top, I went for traveling, I ran out of money, I fuck up the whole market thing and all that. I could still just go back to my old life and do the same thing all over again, because I know how it's done and I know the people, and I could easily, even now, I mean, I'm not in Germany since basically 3 years, but if I wanted to, I could go back and I could work in each company. I could work again if I want to, because they all look for people. So know your worth. It's not that you need this. Most of the time, the company and those people need you, and this is what people don't understand. Nowadays, or especially like in Europe, I know that's the case. Globally, this might be a different thing, but as said, I could always go back. So there was not really a risk. The only risk I always saw is, what if I never tried? What if I never just tried and tried to pull it off? Then I will always think when I'm old, like, oh, what would have been if I've tried? And there is the saying, we don't regret the things we have done, we only regret the things that we never tried or did not do. And I think this is very true. Yeah, and sure. I mean, you can always ask, and I'm always willing to talk about this, because I also think people are so focused on technicals now for trading, but also in life. And a lot of things are just mental. I mean, if you do this for a little while, you know that trading is mainly mental. After you understand what a chart is and how it behaves and all this, and buying and selling and blah, it's like 50% of the whole game, or maybe 20, and the rest is just mental. And it's the same thing in life. If you want to achieve something, if you want to be someone, if you want to like live your dreams, it's the most difficult part is mental. Like trying it, be willing to fail, and all those things. Like be willing to ask, like be willing to receive a no for asking, and all those things is what people struggle the most. What I've seen. Compared to, like, for example, as said, I wanted to be a tree climber. I had no clue how to do that. I had no clue about like the whole climbing technique. I didn't even know which kind of trees I'm looking at in the beginning. But these are things you can just learn by repetition, and you will always find people that are willing to help you. And I even worked for a company that paid me for learning this then, right? Because as said, they always look for good people everywhere. And they paid me for learning this, and once I learned the technicals, I could just do it. But the main thing was the mental thing, like quitting my job, my safe job where I could earn good money and I know what I'm doing, I know the people, everything is safe in my little bubble. And I just decided I quit everything there and I go to another place. And this was not made by technicals, not made by planning or anything. This was like by the mental skill of like being willing to try something you never did before, like going into the unknown, into the scary place, or doing the scary thing. And same with trading. As said, I think 15 to 20% is maybe technicals, and this depends on how much time you put in. If you find the right sources already, it's just about time and repeating it and repetition, getting the reps in, and then the rest is all mental. And for the mental game, it's also important that you do the right stuff from the beginning. We talked about this yesterday, Tinox. Like, practice does not make perfect, practice makes permanent. And if you practice the wrong thing over and over and over, you make it permanent, right? And this is also very important for the trading mental game, because if you keep on doing the wrong thing, you will make it permanent. It is really a mental game. I don't take the prepared trades that would work a lot, but the ones that fail, I take often. Sometimes just have to accept the risk, I think. Yeah, that's a thing. And a very good like training for that is the Mark Douglas thing of taking 20 trades on the same size. You just go for one edge. You decide, like, for example, the Money Tower edge or the Smart Money Concept edge or whatever you want to call it. You have a break of structure, you have a pullback into a key level, break a block with a fib alignment, and you just take those trades and you take them all on the same size, and you don't overmanage them, you don't size them differently, And even if you think it will fail, even if you think it will work, you will always size the same and you will always just take it. And this is a great exercise, a great repetition of like accepting the risk and just understanding and learning to use this kind of edge. Because you can obviously then with sizing can change a lot of things. And you can then size up your winners, you size down your losers. As said, some setups are more optimal, some are not. But the problem is the market makes us think that the right ones are the wrong ones and the wrong ones are the right ones, right? And obviously then if this is still happening to you, play the same size and just play the edge on a very low size. Just keep on executing it, and then it will get better over time. I'm at this point at the moment, 2 kids, a house, need to pay for 30 years, now 25, lol, perfect match to your X-Street. Where are you from? You're in Germany, I thought so. But I'm bored about all this 8 to 17 job, maybe work to 73 years in Germany, so I need a second way for me to my kids. This can push me brutal. Not talking about buying a Lambo, but for free. But I don't rush it into anything because this can't help here. Yeah, and obviously you have a lot of obligations, right? You have a house, you have 2 kids. I mean, you bought the house probably for almost 0% interest rate, or maybe 1% because it was for 5 years ago. So in 2020, record low interest rates, but obviously also the houses were at all-time highs. Just think about refinancing and all that, because I think interest rates will go higher, and imagine just they go to double digits or something like that. So if it's not already written in stone that you have this contract for like 30 years, but refinance in 10 years, I would be very careful, because they want to buy back those houses, and they want to buy back those houses for lower, right? And if people can't like deal with their mortgage anymore because it's at double digits interest rates, a lot of people will get problems. And think about this and calculate this well. Need to be ready in 7 years. Yeah, calculate this. As said, don't think that interest rates will forever stay at 1 digit and stuff like that. I think a lot of people, it will break a lot of people's necks. And that this is like, as said, it's a market like every market is. They sell it at all-time high, not especially your house, but as a market in general, right? And then now it corrected 30% or something. Why? Because interest rates went up. And a lot of people were already forced to sell their houses because they can't deal with it. A lot of people also have this variable mortgage, which then, like, if interest rates goes up, you will just pay more per month because it's not written down for like 10 years or something. So be careful with that. And as said, if they go to double digits, imagine how many people need to sell their houses. So the market gets flooded with supply, and this will push prices down. And then imagine like the housing market crashes of about 50%, and you need then to sell your house because you can't deal with the mortgage anymore. This is like bad stuff. This is really, really bad stuff. And stuff like this happens, unfortunately, and especially with family and all that. And I get that you don't want to buy a Lambo or anything, but build some kind of cash flow, like build something for yourself, because even if you work more hours in your day job, it will never even closely compare to what you could earn by putting in the same hours for yourself. And I mean, you see the same, you do it already with trading and all that, but also try to build several cash flows. Like look for things, look for opportunities everywhere. Because as said, it's like you might miss a shot, you might get a no or whatever, but you miss every shot that you not take. And so take shots. Yes, thank you. Will try. I know his course is really great. Yes, the thinking how the market will move is my issue. Thank you. Yeah, we all have been there. We all have different personalities. For some of us, is some things are easier, some things are harder. You just need to know what works for you and what not. And as said, it seems like accepting the risk, like you said. Usually we know already what's the problem, and so just take those trades. Don't think about them like a mechanical thinker, like a trading bot. You define your edge, and then you just execute on this edge over and over and over. Yep, 1% at house, all-time high price, contract for 10 years, need to be ready in 5 years. And you know what? Why I know this? First of all, because my dad was always annoying me with this kind of stuff, because he was always good with mortgages and also his house, and then he was taking money from here and putting in business and blah 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 blah. He also has good connections to the bank. It's not that he's like super rich or anything, but he was a good businessman in that sense, and he was always annoying me with that. And then once I started to learn about the market, I understood immediately that the housing market and the whole mortgage thing and all this is exactly the same. It's all just the market. And with those record low interest rates, they forced the entire generation. How old are you? I would say like mid 30s or something. No offense if you're not, but with 2 kids and everything, I would say you're mid 30s or something. And this is, for example, the exact same age my older brother is, and he has done the exact same things. He has 2 kids. He has bought a house, or he even has built a house, but he did it in Corona, so the construction workers had problems and it was delayed for 2 years. He couldn't almost handle the whole mortgage thing. Now the house is almost done, and now he really calculates what this means. Like, he needs to pay until he's 50, 60. What does this mean if he needs to refinance and all that stuff? And he's now even thinking about selling the house, because in the beginning he 35. In the beginning he did not think about this. He was just like, oh yeah, nice, a house, a garden, 2 kids, let's go, that's the dream. And now he's working his day job full time. Then he's delivering pizza and stuff, because it's easy for him to do that in the local area, because he couldn't handle all those obligations. But it's not like, I mean, it's bad for him, but at the same time, while not being able to handle all of those things, he then also now he now has a dog as well. And so he has no time. He has the money is very, so he has almost no money for himself, just for paying the bills, and then he's also getting a dog. It's like, bro, what the fuck are you doing, man? And yeah, as said, he's thinking about selling the house again. And as said, I'm not saying that's the right thing or that's the wrong thing, but in 10 years, imagine interest rates are at 10% or something, because the trap works that way. It's not just you who has done this, and the bank always gets the money. And so, yeah, difficult situation, but as said, think about those things rather now than too late. Yeah, but sounds like normal guy. People don't think about the future. Yes, and his dream, I mean, like having a family, having a dog, and all those things, these are like beautiful dreams, right? But if, for example, in Germany, this is also the trap. They want to have people pursuing exactly this thing, because this is how they trap them in this kind of system, like taking debt, buying a house they can't afford, getting kids, and all those things that tying you down. Not like kids are bad or anything, but I mean, there are obligations, right? You can't just move anywhere else. You can't just say, okay, fuck it, I go somewhere where it's cheaper or anything. No, the kids need to go to school, they need to have a stable environment and all those things. And as said, they know this. They know that people want to have a house, and so they gave them one, more or less. For the MMA server, yeah, he asked me about trading, and I was completely honest with him, and that it takes a lot of time and anything, and all of that. And he has said he has no time. But then he also asked again, and he said he made a demo account and he bought some altcoins and all that. And then this was in May, and everything went up then. And he said, "Wow, that's so easy!" And he's selling now, and then he's buying back and all that. And he was saying, "Tell me when to buy and when to sell a little bit," and I did that. But he hadn't got the patience to follow it. And a lot of people, to be honest, a lot of people ask me. I have also a lot of people in the server that ask me if they can join anything. I give them for free, because I don't do this for the money only. It's nice to have the cash flow, but on the other hand, it's also way nicer to help people, because trading provides nothing basically. And I really enjoy that I can help people to some degree. And so I have a lot of members in here that are basically in here for free, because I know they could need it. But also, if you give people something for free, they don't really appreciate it as much as if they had paid something for it. And so you see a lot of people that want to start something and they want to, yeah, they're really excited, and then they, after a short while, they stop it again. Okay, guys, anyway, I need to leave because I need to walk the dogs and I got a Menti later. And now, right now the sun is shining, so I'm gonna use this time. Tinux, you finish your message, please. And then I'm gonna wrap this stream up. You don't know how you already helped me with the stock Swipeable course and with the PDFs. Thank you for all of this. Yeah, it's my pleasure. As said, really it sounds a little cheesy, but it's my pleasure. And thank you for joining in. And we talk next week. Majors update as usual on Monday. You guys have a great weekend. Enjoy your time and see you. Bye-bye.